Good morning and welcome to today's February 2023 Fund Flows in Review webinar. My name is Nicole. I'm a Customer Success Manager for institutional clients here at YCharts. And today I'm joined by my colleague Kyle Gears, Senior Customer Success Manager. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. I'd also like to point out that a recording of this webinar will be emailed to everyone tomorrow and will also be available as a replay on our YouTube channel. So remember to like and subscribe so you don't miss out on any of our newly released videos. And with that being said, let's go ahead and get started. So before we take a deeper look into last month's fund flows, I'd like to take a look at some significant market happenings and trends. As you can see on our slide here, overall themes of rising rates and the continued battle against inflation remain steady in February. Hopes of a sustained rebound in investor demand really dissipated last month as U.S. funds saw about $3 billion leave. The general flow of trends across categories were similar to the beginning of this year, but inflows moderated while outflows picked up. Investors are appearing to seek safety in February, flocking to short duration treasuries in lieu of equity risk. And then in the equity arena, emerging market flows slowed on the back of renewed strength in the US dollar, but preference for international flavor remains. Taking a look at our first slide here, we are looking at the 2023 broad category fund flows in February. Not surprising, given the uptick in inflation data, hawkish comments by the Federal Reserve officials, and rising interest rates, investors were net purchasers of money market funds. So if you take a look at that purple bar on the left-hand side here, we're seeing an inflow of $51.67 billion. And investors were also net redeemers of equities. So if you take a look on the right-hand side here, we'll see in that orange bar an outflow of $20.96 billion. Following a brutal year for bond funds last year, it's safe to say that money market funds are now popular again this year. After languishing for years in low yield environments, these funds are now seeing increased inflows from investors seeking to preserve and protect their capital. An aggressive pace of interest rate hikes from the Federal Reserve sent bond yields soaring, with many bond funds suffering unprecedented losses. And then as a result, since bond prices fall when their yields rise, and vice versa. Now, many of these investors are turning to these money market funds to take advantage of higher rates. With that, let me go ahead and pass it off to my colleague Kyle to cover our next slide here.
And here we're looking at fixed income flows across mutual funds and ETFs. And to me, and based on a lot of folks I've been speaking with, I mean, this is one of the biggest stories right now. This is the second month in a row where we've seen significant flows into the intermediate space. So a lot of investors taking on duration yet again. And we've seen over the past 3-6 months, a lot of cash moving to money markets, CDs, a lot on the sidelines. And it's a matter of, okay, well, what's the Fed's next move? Obviously today we have Fed minutes coming up and Powell speaking. So it's going to be a good indicator of what's going on with rates. Now, over the last 2 months, like I said, we've seen inflows into core and core plus. So it's a matter of, hey, do we think rates are near their highs? There's a chart that I'm going to share with everybody toward the end of the demonstration that's been very well received from a lot of clients, looking back at 18 and 19 during that Fed cycle, and basically just trying to understand, hey, what is the upside in adding duration back to the portfolio? How can you visualize that? How can you communicate that? What does that look like versus sitting in cash? And I think that's why you're starting to see a lot of that money move back into that intermediate space. And based on the chart here, looks like nobody wants to touch high yield, even though it's got beaten down significantly, and the price on a lot of those issues is pretty low as of right now. And then you also see ultra short getting some good flow as well, and could potentially be folks moving money out of money markets and or CDs and looking for a little bit more upside and price appreciation within those underlying issues.
Looking at this next slide, we are examining combined mutual funds and ETF equity style flows. U.S. equity funds had a modest outflows in January, but saw larger ones this month, as we can see here in this visual. The category group dropped by about $25 billion during the month, driven by a $21 billion outflow from large blend funds. This dispersion of flows within the broader group is likely linked to the relative prevalence of actively managed funds, which continue to struggle to attract inflows. However, we can also speculate that investors have been hit by worries over higher interest rates, as strong economic data pointed to the U.S. Federal Reserve sticking to its tighter monetary policy for some time more. Also, we have some geopolitical concerns, persistent supply chain issues, ongoing inflation, and aggressive interest rate hikes by the central bank, which have significantly hurt equity markets, leading to a more aggressive flight out of equities, including large value, large blend, and large growth.
This next chart breaks down the flow between mutual funds and ETFs across styles. And the clear-cut takeaway here is almost, once again, right across the board for funds, but you do see some green down below for ETFs. And it's interesting to see that large blend sees the largest outflows. Granted, it is the largest in terms of assets across those style boxes. It's interesting also to see massive outflows from some of those growth funds, but you see a positive number for growth on the ETF side of things. And once again, is that investors placing bets on the Fed slowing or pausing nearer term than what was expected? I mean, we've seen the market rally, or we've seen growth significantly outperform so far year to date. So once again, let's see where we go from here. When we're talking mid caps and small caps, you can see some pretty significant flow, relatively, into the mid and small space. Reason being, a lot of investors are probably positioning for some sort of recovery. If you look at the historical data on small caps and mid caps versus large caps coming out of bear markets, they usually tend to perform very well to the upside and can provide alpha versus what you see with large caps. So as far as the landscape on funds and ETFs across those style boxes, that's something that we're seeing with the flows in the data.
This slide is examining the sector equity mutual fund and ETF flows. Some sectors like energy and healthcare see both negative index performance and outflows this last month, but on the other hand, financials and industrials saw positive ETF flows, looking at 1.5 billion and then $940 million of inflows respectively. With the recent banking crisis, perhaps financials will take a hit as we move into April, but that certainly remains to be seen. All right, at this point, I will pass it on to Kyle, and we will jump into our site here and talk through some additional items. All right, and Kyle, I'm going to go ahead and start on the fund flow reports.
Perfect. So a lot of you who are attending might not have used the flow reports in the past. These are something that we generate on a monthly basis. We send them out via email to all clients, but if you missed it or hit the spam folder, you can't find it, I want to show you where you can find those within the website. You're going to go to the support section within YCharts, and you'll see the dedicated area for fund flow reports. So it's about halfway down the page. in the support section. So if you go to the support section, and about halfway down, you'll see Fund Flows Report. Now we break the report out into two different types. We won't get into the specifics of it, but one of them just looks at the largest 5 categories that have seen inflows and outflows for funds, and then ETFs. Then we have the strategy report, which zooms out a little bit and looks at all of your major equity and fixed income categories to track trends in flows and to determine whether or not it might be tied to performance. So it's conditionally formatted to draw your eyes to those areas. The other item that we produce kind of ties into our slide deck. So the webinar that we hosted today, you'll see the visuals deck option at the end of the fund flow section. So the fund flow section, you have those 2 reports, and then you also have the visuals deck, which contains the bar charts where we consolidate a lot of the individual category data into the bigger picture. If you're a fan of the fund flow reports and you appreciate the displays or the visuals and communicating that with clients, we also produce quarterly econ decks or econ reports, which can be accessed once again in that support section and then the resources page. We have it historically. Once again, it's a quarterly deck, so it comes out a couple weeks after the quarter ends. So look for this in about the 2nd week of April, but it includes phenomenal visuals to help communicate what has gone on in the past quarter. So keep in mind, phenomenal resources for client communications or engagement. Next, I want to jump into a couple things within the website to at least help in those conversations that you're having with clients on the spot. Now, the first thing I want to jump back and reference is a chart that I mentioned when I was talking about the fixed income flows, and the idea that, for one, the fixed income market usually prices in Fed cuts before they occur. And 2, what does the upside look like? So once the Fed does start to cut, what is the upside appreciation within fixed income or certain asset classes or sectors? Now, completely different scenario here we're in now versus where we were in 18 or 19, but just keeping that fundamental idea of, hey, falling rates, you look at price appreciation on certain sectors or certain issues. So ultimately what this chart is telling us is that there's quite a bit of upside in investment grade corporates or even the ag, and adding that duration trade versus sitting in cash in the form of BIL being used as a proxy. We can see in that second line, we're looking at that green chart where rates peaked all the way on the left-hand side. And we're using the 2-year here. So rates basically peaked in November of 18 before the Fed even made their last hike. So that's the market pricing in what is going to happen with the Fed funds rate. And ultimately, that happens. And when the trade moves, it moves pretty quickly. So you can see how much upside just based on that cumulative return that you're provided with if you're purchasing investment grade corporates or the ag in November of 18 and holding it until the end of 19. So once again, performance of those different ETF proxies up top. You have the 2-year treasury rate in the middle in that green section. And then the pink line is the Fed funds rate. So just tying that all together and understanding what that timeline looks like. This is a great way to communicate to clients, hey, rather than sitting in cash or CDs, this might be a great opportunity to add some duration. Next, I want to hit on mutual fund and ETF data pages. We have a couple new options here. So if you go to that data section, you'll see mutual funds and ETFs. They're dedicated to those product types. So if you click into one, you'll be brought to the page. And basically, this is a great way to digest data. It's all set up for you. You don't have to build anything or customize anything, although there are some custom abilities available. But what it does is it shows you the style boxes, the performance of styles. How are different styles compared to one another over different time frames? As you scroll down that list, you'll see a larger grouping or the broad asset class performance. So the biggest, or I guess I should say, the top performers and bottom performers within their respective asset classes. And it's a wide range of products or a very large pool. So you might get some smaller, more unique items that show up. But I think the most impactful is that next section, which lists out every single category that's available from Morningstar. So if you go to see all categories in the upper right-hand corner, what we're looking at is every Morningstar category for mutual funds. So now you can come in here and you can dynamically sort by flows or even by the category average performance to start gaining insight as to what's happening in the market or where the money's moving, which then you can apply to client conversations or tie into products that might make sense or be good fits for clients. And then the last item on that page is more of a conditionally formatted section where you can choose to view either performance or flow data, and you can actually select the categories that are most important to you. So if you go to the edit categories section in the upper right-hand corner, you can select the exact categories that you want to see. So, what makes sense right now based on the current environment? What do I have a very strong presence in as far as a product in a certain category? You can adjust those and have those set as your defaults. Once you make those changes, they're set going forward. It's very quick and easy to navigate to this page and at least just get a good idea. Hey, if I have a great product in, a core or core plus or whatever category you want to focus on, you can choose whether you want to see performance or flow data for that category. It shows you the biggest contributors to flow or the biggest detractors from it. Same thing on the performance side of things. A couple more quick items that have been added recently that you're going to want to stay on top of or at least get a feel for. One is our report builder. This is a brand new tool that has been released, which now allows you to customize reports. This is an add-on product, but ultimately allows you to create reports from scratch, choose the metrics or the timeframes that you want in those reports, or even pull in saved assets from other areas of the tool, such as a custom fundamental chart with a unique time frame overlaid with economic data, or a comparison table where you've selected the metrics or you have unique periods within that table to really help tell the story. It also allows you to add in your own firm branded materials, images, or PDFs. So something that can take client engagements and interactions to the next level. The other item that we've added recently to take note of is our scenarios tool. And scenarios allows you to enter in an individual product, an entire portfolio, and then set up an actual scenario. Are we making contributions? Are we taking withdrawals? Are we making contributions to a certain date and then taking withdrawals? Are there any one-time contributions or events? So ultimately, it gives you a hypothetical to determine what that might look like historically. And I think one of the most interesting things about this tool is you can overlay multiple scenarios. What does a 5% withdrawal look like versus a 4% withdrawal? You can also create multiple scenarios within one view, or create, a withdrawal to a certain point and then a contribution. It just doesn't have to be one steady stream. But once again, if you're talking about planning or income or things of that nature, this is going to be a great tool to aid in those conversations.
All right, well, thank you everyone so much for tuning in today. The last thing I'll mention here is if you'd like to subscribe to our monthly fund flow reports, please take a look at this slide and go to YCharts.com/fund-flows opt-in. We also store historic fund flow reports in our fund flows library, so please feel free to take a look at that as well. And again, all that information is up here on this slide. Thank you all so much for tuning in. Again, if you have any questions or if you'd like to chat with myself or Kyle, please don't hesitate to reach out to us. Thanks again and have a great day.